ahead and get started with a round of introductions. Just to name the organization that you represent and what's your favorite color? So my name is Karen Phillip and I represent Caribbean Policy Development Center and my favorite color is fuchsia. But I'm going to ask Sanke and Sandra to go last so that they could tell us a bit more about their organizations.
Sure, thank you, Karen. So I'm Sönke. I work for MCI, Munich Climate Insurance Initiative, and we are together with CPDC working on this project. So we are working at a global level and providing the consortium with thought pieces around climate and disaster risk finance and insurance. And we work on policy and governance. We also have a risk analytics unit, and we also work on implementation. Actually, in the region, we have a project in the region, and I have a colleague in the call, Jennifer, who can will explain it also later on during the webinar. Favorite color, difficult choice. When I was a child, my favorite color was blue. Right now, I like everything, actually. Hopefully, it's colorful.
Okay, that's good to hear. All right, so who's up next?
Good morning to everyone. My name is Aiden Futo. I'm the Technical Coordinator for Climate Smart Agriculture and Rural Enterprise Program.
Thanks for being here this morning. What's your favorite color?
My favorite color is black.
Okay.
Hi. Yeah. Sorry. No, go ahead. Yeah, just as Sanke was saying, my name is Jennifer Phillips. I work also with the Munich Climate Insurance Initiative and will be presenting later on the climate risk adaptation and insurance in the Caribbean project. And my favorite color is blue and green, as you can see.
Thanks for being here, Jennifer.
Yes, good morning. My name is Steve Maxime. I run a virtual consulting firm called Science Based Initiatives, and I'm based in Grenada, and my favorite color is green.
Another green, okay.
Good morning. I am Derek Charles, and I'm the National Specialist at ECO, and my favorite color is green.
Oh, yeah, we had a lot of green in the next group too. Green seems to be a universal color in the Caribbean. Yes. Who's next?
Good morning.
Hi.
Good morning. Hi, good morning. My name is Elaine Henry McQueen. I am the Senior Program Officer for Gender and Family Affairs in the Ministry of Social Development, Housing and Community Empowerment. My favorite color is aqua, and it's my new favorite color. I have asked two of my colleagues to participate as well, but they have not yet joined in. I actually only just forwarded them the link.
Okay. No problem. Thanks for being here.
Okay, good morning. I think I'll go now. My name is Richard Jones. I am officer in charge at the Caribbean Policy Development Center. So I want to thank you as well for being on this seminar with us. I hope that's interactive. Feel free to answer or ask any questions that you desire. Please do not be shy. It's about information and education this morning. And I look forward to a good session duration of the next 2 or 3 hours. Have a good day.
Thank you. Is that everyone in the room, or we have some shy people in the room?
I think you have to call them out. The order is different for everyone, so.
I didn't hear from Christian, GC, and A. Yeah.
Good morning. My name is Chris Son. I'm representing Caribbean Policy Development Center. My favorite color is black.
Sandra, you want to go?
Good morning, everyone. Greetings, Karen, Richard, Kristen. Let me first of all say good morning and thank all the colleagues who have responded positively to the invitation on your behalf to be here. I know it's very difficult, and since we have webinars now instead of the placement, you know, it seems as we could get in more. So I know it's getting crazy. I want to thank all of you. This meeting, CPDC is collaborating with the Interagency Group of Development Organizations, one of its member agencies. I'm the current chair. And the IAGDO is an umbrella organization representing 7 indigenous development NGOs. And at the collective level, we undertake projects together which have a national impact. And one of the areas that we advocate collectively on is the environment and environmental issues and sustainable development. Thank you, Karen.
What's your favorite color, Sandra?
Oh, black.
Black. Oh, so we have, I think that's 3 blacks. That's cool. Okay, and thank you so much for organizing this workshop. We could not have done it without you, and MCI as well for being another partner. CPD.
Good morning.
Good morning.
Yes, my name is Colin Gilchrist, and I am representing civil society in Grenada. Thank you for the invitation from Sandra.
Thank you for being here. Did somebody else new join in and want to introduce themselves?
I'm seeing Martin, and there's GCNA there.
Gilchrist back on the line. I forgot to give my favorite color, and my favorite color is yellow.
Okay, that's nice. That's a nice vibrant color.
Sorry about the green people, but I'm yellow.
Sunshine.
Good morning.
Good morning.
Morning. All right, my name is Martin Antoine, and I represent the Grenada Cooperative Nutmeg Association. And my favorite color is blue.
Okay. Okay, thank you so much for being here, Martin.
Thank you.
Did I get everyone now? I believe so. So I just had on the camera so y'all could put a face to the voice that's going to be talking to you for the next 2.5 hours. I thank you once again for being here. I was saying that CPDC is a regional NGO that has members from Belize straight down to Suriname, and we work with in 4 main areas, which is trade, governance, sustainable development, and capacity building. And also, Christian is reminding us that the attendance sheet is in the Zoom chat, and to fill it out. Oops. All right, so let's get started.
Karen?
Yes?
Can you repeat that? Because I heard as if there was a little confusion about the attendance sheet.
The attendance sheet is in the chat for you to fill out. It's a Google Docs.
I already tried and it says there is no access to edit. So I did put a reply in there asking to open access.
All right, just try again because I updated it just so. My apologies.
Oh, okay.
Okay, thanks for that. So we're just gonna have a little bit of rules of engagement We're going to keep the mics and the videos off to help to conserve the bandwidth so that we don't have the call drop in. Questions could be submitted in the chat and then we will read them at a scheduled time unless we ask a question and we're having an interactive section. And also asking for everyone to be respectful of others' opinions and positions. And before we start, I want to hear from you all again. I have a quick poll, only 4 questions. It should be popping up on your screens now. Everyone seeing it? All right, so we're going to close the poll and let's see what we said. So 50-50 is aware of climate insurance schemes in the Caribbean. We all agree that the frequency of natural disasters has increased. We all agree that our country has suffered great economic loss to climate events. And we all agree that my government should have a proactive approach to planning for climate and disaster events. Okay, that's good. And I hope by the end of this consultation, you'll be a little bit more aware of the climate insurance schemes available. So if we move on to the overview of what we're trying to do, we're trying to discuss that climate risk and finance insurance has 2 main aims. It's about proactive planning. So the same way we're saying that the government should be proactive, we also should be proactive and hold our governments accountable and building resilience. It's happening under this program called the InsuResilience Global Partnership, which is a multi-stakeholder partnership that aims to bring together representatives from the G20 and V20 countries, civil society, private sector, and academia. They're working to increase the access to solutions to up to 5 million people by 2025. And it takes a principled and a gender-sensitive approach to achieving these goals. And then CPDC comes in as it's trying to raise awareness of these things in 3 Caribbean countries: Barbados, Grenada, and Antigua. So we had Barbados consultation on Tuesday, Antigua yesterday, and we ended with the Isle of Spice. So the impacts of disaster. So we all know that we all agree that it's increasing, but what are these impacts that we're facing? Well, you all know more than anybody else at Kick 'em Jenny that has given us a little kick. And so therefore there's expected to be an increase in earthquakes, hurricanes, excessive rainfall, and as such results to the fisheries, the oceans. And we also understand that some of these changes have been linked to human influences. However, they are natural changes in the environment and climate. So what extreme events have we experienced so far? Hurricane Ivan 2004 in Grenada, which destroyed 90% of homes, left 17 people dead, and 900 million in financial damages. So when you all say you all agree that we've lost economic gains that could have been made, you all know what I'm talking about. Y'all could teach me this session. But we also know that it's not only Grenada, it's Dominica, Barbuda, and Trinidad have suffered from these extreme events. But how do these extreme events impact you directly? So we have longer droughts in countries like Barbados, Antigua, and St. Kitts and Nevis being told that they are water scarce countries, which is going to affect their ability to plant and to harvest food, which impacts the ability to have food security in the region. And we understand that farmers are particularly vulnerable to droughts as they depend on their livelihoods for rain to give them crops. And also we have climate change evil's twin, ocean acidification. Sorry, I'm always tripping up over this word. Ocean acidification, which is projected to cause major damages to coral reef systems and lead to a loss in fish production. But under this context of CDRFI, we need to understand that we are looking at the heavy rain, excessive rainfall, flooding, heat waves, dry spells, droughts, cyclones, and hurricanes. And then the non-climate ones are the earthquake, volcanic eruptions, and tsunamis. So how have these impacts been affecting across the world? If we look at this slide, it shows that we have great loss of money in South America, $1 billion US, Africa 1.4, Asia 95, and then also in the Caribbean in 2018, 82, and in 95, 55. But when we look at the amount of persons that have died because of these natural hazards, it's actually pretty high, and also higher for those in the developing countries. A recent study found that 95% of natural disaster-related deaths occur in developing countries. Oops, sorry. So what do you believe that we could do to try to become more resilient in the face of these natural disasters? I can take comments from 3 persons. Okay, so I'll move on to the next poll. All right, let's see what we said. So we said that the weather changing patterns have impacted my livelihood, the majority of us, while the majority have also said that we've suffered financial losses and that I often prepare for the hurricane season before June. So Sandra, you want to tell me how you prepare for the hurricane season?
Well, you know, you need to basically start storing the food, getting the plastic bags, have a plan about what is going where. You know, the hurricane shutters, that kind of thing.
Okay. And what about you, Kurlan? I'm hearing somebody's, okay. Derek, is that you want to contribute?
Yes, I just wanted to say one thing, that we follow the advice of the disaster agency here, that is NAGMA. I think that's very important. They give sufficient information, in my view, to prepare everyone for the season. Thank you.
Okay, thank you for that. So we're hearing to anticipate that it's coming and start to put things in order. So there was a study done by the ODI that talked about building resilience requiring you to have the 3 A's approach. However, when I was looking at it, I couldn't help but think about a AAA battery and the Energizer Bunny, and that they want us to just keep going and going and going. So as Derek and Sandra said, you have to anticipate it. You have to be able to estimate what the impact of the weather events are and have to be able to respond to the weather events. Then you have to have the ability to absorb it. You have to be able to understand that the winds are coming, so I need to close my shutters to ensure that my windows don't break. And then I have to adapt after the actual event to see how I need to fix, to be like, okay, this worked for me this year, so I'm going to keep doing this, but this didn't work for me, so I'm going to create a new way to do it. Right? So then how does all of this fit into this climate disaster risk finance and insurance? Like, it sounds like a leap, but at the same time, it isn't. So when you anticipate, you undertake a risk assessment. What is a hurricane, a tropical wave passing, going to have the same impact on me as a hurricane category 4 passing on me? And then also we have to be able to absorb. So improving our financial liquidity after a disaster, and reducing the stress asset sales and increasing food security and enabling rapid recovery. Because we know the longer that we take to financially recover after an event, the harder it is for us to continue going on with life. And then we also need to adapt to have increased savings, increased productivity and investments in higher returns and credit worthiness. And we need to give rewards for good behavior. So if you took risk reduction steps, you should be rewarded for such, and therefore creating a culture of preparing.
Karen?
Yeah?
When you get to another pause again, I just want to indicate that you have some more people online. Huh?
Okay.
Some more participants have joined us. Good morning, everyone, again.
Yes, good morning, everyone who is new. Thank you for joining us. We are very honored with your presence today. Today we're discussing climate disaster risk finance and how it could work for us as individuals and as a nation of Grenada and as the region of the Caribbean. And I spoke about the fact that we have natural events that are impacting us and our ability to earn a living, our ability to carry out our regular lives. We have droughts in countries like Barbados, Antigua, and St. Kitts and Nevis. And we also have issues with our ocean and losses of fish production. And I also spoke to the fact that we have greater deaths in developing countries than across the world, which is a big issue. So I was saying that the experts were telling us that in order to develop resilience, we need to be able to anticipate, absorb, and adapt. And I hope you all are listening, because if you have not realized by now, I love my little quizzes. I'm not going to tell you when the next one is coming, but another one will be around the corner, right? So all of this with climate risk insurance is only part of it. They're trying to have a bigger picture called the integrated climate and disaster risk management. And we're just going to touch on it on this slide, and then we're going to move to it later. But it has 5 components: prevention, retention and transfer, preparedness, response, and recovery. All right, so it's the integrated climate and disaster risk risk management. So how does all of this help us? We could see that the extreme weather events are on the rise, especially in developing countries, where they produce severe setbacks to development. The current response is not done on a consistent basis, therefore diverting funds from other development programs and deployed with significant delays. If we have climate disaster risk finance and insurance, not only can we enhance the availability of resources, but also their timely deployment and support countries in better planning for risk and including preventive risk reduction and coordinated disaster response. So how does CPDC, IDGO, and all of us come into that? So there's a project called MAPS for short, which the aim is to reduce the negative impact of disaster and climate change on vulnerable groups in selected developing countries through the use of poverty-oriented and human resource-based climate and disaster risk management in the context of global partnership, of the InsuResilience Global Partnership. So let's talk a little bit more about this global partnership. The vision of this partnership is to strengthen the resilience of developing countries and to protect the lives and the livelihoods of poor and vulnerable people from the impacts of climate shock and disaster by enabling faster and more reliable and cost-effective responses. It's an interactive, multi-stakeholder community. So you see how in this call we have persons from all different groups. It's the same thing. We want to be able to have, it wants to be able to create an environment where all stakeholders could sit at the table. So it links with the needs, it links needs with solutions, coordinates implementation efforts, shares learning and best practice, integrates and aligns risk financing with broader climate and resilience policy agendas, and seeks to amplify the impact of ongoing initiatives, and supports the development of new climate and disaster risk finance and insurance solutions to help meet the growing needs of developing countries. So what is the main outcome that we're trying to have? A development of a multi-stakeholder action partnership at the national and regional level, and to promote development and implementation of gender-based, poverty-oriented, human rights-based approach to climate finance. The output on the country and the regional level is to establish a multi-actor partnership in project countries, facilitating exchange within and among project countries. At the global partnership level, we want positions and suggestions developed in the project get reflected to the policymakers. So one thing about CPDC is that we believe in putting people at the center of development. So we want to ensure that your voice makes it to those G20 and B20 country policymakers to ensure that CSO partners are incorporated and have an effect on the political activities. So who's implementing this project? This project is funded by the German government, and CARE Germany with German Watch and MCII are the ones who are overseeing it. It's also being implemented in 7 countries: the Caribbean, Laos, Madagascar, Malawi, Philippines, Senegal, and Sri Lanka. So we hope to develop from this a toolkit that can help civil society research products on gender, global policy processes, slow onset events, humanitarian systems, innovative finance mechanisms, activities that influence global and regional policy processes. And then we want to have exchange meetings and conferences to ensure that we can learn the best practices from across the world and try to implement them in our region. And as well to have country stakeholder meetings quite like this one, and to help to contribute to the global partnership groups, working groups, and governance and products. So who are the target groups of the InsuResilience Global Partnership project? The direct target groups is civil society actors, and then relevant actors who will also be government agencies, private sectors, universities, and insurance agencies and such. But we don't want it just to stay with us who's at the table, right? So the indirect group is that we wanted to go back and influence the whole of Grenada, the whole of Antigua and Barbados as well. Right? So let me hear from 2 or 3 persons. How do you prepare for the hurricane season? Do you think that you prepare before and then you have also a course that occurs after?
Hi, good morning. Can you just repeat that question again, please?
So I'm asking, how do you prepare for the hurricane season? And is it that you just prepare before the season, or you also have to take steps after the season?
I just like to comment. I think it's best to be always ready, always prepare. Don't wait until the hurricane comes. Do whatever you need to do when you have the time, because you may lose.
What does that mean, Derek? Like how do I stay always prepared?
It means that usually there is a hurricane season. So you start preparing from day one. From the time the hurricane passes, if there's a hurricane, you start making sure that you have everything in place so you don't forget things. In other words, you may have a checklist of things that you need to do and when, and just do it as you go along before the hurricane season comes. Thank you.
Okay. All right. So we're staying always prepared, which means that we're going to have stuff put aside for before and after. So ex-ante means the financing that goes on before an event or hazard occurs. This is looking at the risk reduction, the risk transfer, and the forecast base. Somebody said, so for risk reduction, they're making sure everything tied down around the house. Risk transfer, they make sure they have their normal insurance. And then they also saying, in case this happens, I'm going to put aside some of this money. And then ex-post finance is what happens after. How do we minimize the damage that may have happened? So for risk reduction, we talk about budget allocation and taxation, which can be done both on an individual and a national level. And then we also have risk transfer, talking about the insurance, the micro and the meso insurance, and also the natural resource insurance. And the forecast-based finance relates to the earlier action response finance based on the forecast of events. And after the event, ex-post finance, we have risk retention, national emergency disaster contingency funds, and budget reallocation. So you wanted to go on the cruise for Christmas, but instead the hurricane passed and part of your roof come off, so you need to spend the money there instead. And we know that happens with the government as well. They say that they go into to repair the school, but then the parliament building blow down, so that gets the money instead. And then the risk finance is the contingent credit facilities, the post-financing instruments, and the grants and loans from other development partners, humanitarian assistance, and private sector. So these are considerations that need to be taken in: timeliness, cost, dispersal mechanisms, risk layering, risk information, and risk ownership. Right. And I know y'all seem to be quite a quiet bunch, but I have another exercise for y'all. So if y'all could take down these questions quickly, I'm going to put y'all into working groups for 10 minutes to discuss among yourselves what is your work, what is the role climate risk plays in it, and how are climate risk being addressed. All right, y'all have it down? Are we all back now? Yeah. So,
yes, hello?
Hello, hi.
Yeah, maybe we are back, yes.
So let's start with breakout room 1, which was Kurlan, LJ, Andrew, Sheldon, and Stephen.
Okay.
Yeah, thank you.
You're welcome.
Okay.
All right. So the discussion, we did introduce ourselves. Most of the persons on the group were consultants, with the exclusion of myself. However, in different areas were addressed, one of which refers to IT role in playing with disaster recovery and preparedness, and also business continuity. They also have to be considered in terms of any financial implication as it relates to continuity within the or in the advent of any disaster, right? So that's just two of the topics we would have addressed.
Okay, thank you. Thank you so much. So breakout 2, Derek, Ingrid, Sanke, Raheem, and Renee.
Yeah, I can quickly report back if that's okay. So we heard actually very personal accounts on especially how the farming sector is affected. We heard about people earning their very livelihood through farming activities, for example, cocoa or nutmeg. In terms of climate impacts, talking about too much rain or too little rain, both. And in terms of responding activities, people were saying that generally, for example, linking different sectors together to achieve sector resilience, but also that the government had to step in and compensate some farmers. And then there was also the notion to say, if something like this happens, there's actually not much one can do other than praying, because, for example, insurance products don't exist, and so there are not many options.
Yeah.
And generally, the sector is very exposed and also vulnerable to the elements. Yeah.
Okay.
If the group has anything to add, please do so. Yeah. But it was a nice bunch.
Oops, sorry. All right, so breakout room 3, Sandra, Martin, or any of your other counterparts.
Sandra, are you hearing us? We need to hear the report.
You can go ahead and get back to that. I'm hearing you.
Yes, but we had a secretary who was taking
Yeah, I am talking. Are you hearing me?
Okay.
Yeah, we hear you. Yeah.
All right. Okay. Yeah. So this group, promoting agriculture, promotion of livelihoods, focus agricultural base, reducing poverty, reducing vulnerability, working particularly with rural communities. The climate risks, of course, had to do with how livelihoods and therefore production was affected. Agricultural production, whether it was nutmegs, poultry, or whatever other crop it was. And essentially, addressing the climate risk was about understanding what the the extent of exposure to the risks, whether it was drought or flooding. That those were the particular, those were the specific two that were named. We did not go on to discuss others. Wind, for example. What measures could be taken to reduce vulnerability? What were the what adaptation measures needed to be taken? And also identifying opportunities that this new situation brought. So that essentially was the discussion.
Thank you so much for reporting back. So the last breakout room was Christian, Colette, Elaine, Lydia, and Jigo.
Christian or Elaine, you want to report?
Right. So basically we had Elaine, and she does gender mainstreaming. We had Lydia, who works is the Central Bank of Grenada. We spoke basically about our roles, our different roles in climate risk. And then we eventually went on to talk about Grenada and their climate app. I don't know if Lydia and Elaine want to fill us in, because we were stopped abruptly.
Elaine, can I ask you to articulate? Because you did that so well in the discussions. Thanks.
Okay, I will. And just to also say that we were having difficulty hearing, starting off, because we think Dr. Guidos and maybe others had difficulty connecting with the mics and so on. So we were having these kind of technical issues to sort out. In terms of what Grenada is doing, we recognized that there is a Ministry of Climate Resilience and Disaster Management and so on, and they have had some development workshops and are working on projects for climate resilience. And among that, we were trying to assist in making those gender responsive. So I think that's where we had gotten to just before the meeting ended.
Thank you so much for reporting. I hope everybody has their technical issues sorted out. Right, and now at this time, I'm going to hand over to Jennifer from MCII.
Thank you, Karen. If you put the presentation on, then we can begin with
you're not seeing my screen?
No.
Oh, okay, sorry.
Right now.
There we go.
Thank you, Karen. Yeah, so basically I'll give a 10-minute explanation about what the Climate Risk Adaptation and Insurance in the Caribbean project is. As you see on this first slide here, this is a project that was led by MCII together with CRIF SBC, which is the regional risk pool in the Caribbean. It's the most successful risk pool around the world. And basically what CRIF does on the macro scale with creating index-based or parametric insurance products for governments, we aim to do for individuals and groups on the micro meso level through market-based insurance mechanisms. And for this project, we also partnered with the ILO's Impact Insurance Facility, together with Munich Re and THI, which is a risk modeler and helped us in the creation of the insurance products. And this project was funded by the German government. So if we go to the next slide. We can see this project is being implemented currently in 5 different countries: Jamaica, St. Lucia, Grenada, Trinidad and Tobago, as well as Belize. And go into the next slide. we see that the project basically has 3 different objectives. The first one is raising awareness and educating on the topic of climate risk insurance. Because the topic of index-based or parametric insurance is still quite new, a lot of education has to be done on it before people would be ready to buy and purchase it in a way that would be sustainable. The second objective then is the actual creation and implementation of these index-based microinsurance products. One of the ones we created is called the Livelihood Protection Policy, also known as the LPP, and this was introduced into Jamaica and St. Lucia. And then along with this, we want to make sure that as we work on this project that we're constantly collecting the lessons learned from our project partners and from the target groups, as well as seeing how our results compare to those who are conducting similar projects around the world to make sure that we can exchange our best practices in a way to make these types of programs successful in the long run. So if we go to the next slide. I can explain a bit about how this type of insurance products differ from your traditional forms. Normally, when you want some type of protection against hurricane risk, for example, you would maybe take out a form of property insurance. And this means that if a storm passes through the island and there's some damage to your building or house, the insurance company would need to send a loss adjuster or claims handler to your property to look at it. And then based on the amount of damage you've received, they would then send you a certain payout. This process, however, is very expensive, and it's why many income groups can't afford to purchase this type of insurance products. And so what countries have been working to developing in recent years is what's known as index-based or parametric insurance. And this means that rather than looking at the amount of damage somebody received after an event, what you do is create an index of different rainfall levels, for example, or wind speeds. And then based on the amount of wind speed, for example, a policyholder would receive a payout. So for example, in the case of Jamaica, what you would have here is if an individual was interested in taking out some protection against hurricane risk, they would go to their local insurer and purchase a product and put down what parish they were living in. And then we would use satellite data to measure what the rainfall and wind speed in the country was. This satellite data is collected every 24 hours. So if a hurricane were to pass through the island, then within 24 hours, the modeler could contact the insurer and let them know that this person has been affected and they need a payout for this amount. And then the insurer would then be sure to send the insurance payout within 2 weeks to the policyholder directly to their bank account. Nobody would need to come to look at their house or property because we already know the size of the storm that passed through. And so the delivery time is much quicker and the insurance product is cheaper than many different forms of property insurance. So if we go to the next slide. Here we can see a couple of examples of when the first payouts for this LPP product were made. Back in 2013 and 2014 in St. Lucia when a trough passed through, as well as again when Hurricane Matthew passed through St. Lucia in 2016. The total amount of insurance payouts totaled $102,000 US. And then in Jamaica, there were some recent events in 2017 and 2018. But when we talk about these types of products, of course, we have to make it clear that it's not an insurance product that would pay out every year, but rather it's something for those extreme events when many people have been affected and people need the extra liquidity to get back on their feet and start recovering more quickly. So if we go to the next slide. To the, going to the next slide on the lessons learned. Yeah, thanks, Karen. Here we basically have started to collect a lot of the different lessons learned when working with this type of insurance product. One of the main ones is the need to work on financial literacy and education with the topic of index-based and parametric insurance. Because it is so new and it works in a somewhat complicated way, we really have to make sure that any potential buyer of the product has a good understanding of how it works. If they expect to receive a payout every time they receive a bit of damage, they will of course be very disappointed and not want to buy the product, because that's not what the product was designed to do. It's really meant to be used for those big storms that come through, or the big troughs, to give a quick payout then. And so this process of course takes a lot of capacity building and education with it. Along with that, we want to make sure that we're explaining what basis risk, and this is something that's inherent in index-based products, because the amount of payout doesn't depend on how much damage one receives, but rather what the level of wind speed was or the level of rainfall. It's never going to perfectly align with how much damage you received. And so this difference between the amount of damage and the amount of payout is what we call basis risk. And it can also work in the opposite direction, where if you're very well protected and a storm comes through, but your house hasn't received any damage at all, you would still get a payout if the rain levels or wind levels were high enough. And this, of course, is a bit of a risk to the insurer, but it's something that's inherent with the product. So we need to make sure to explain this to people so that they know it's not to cover all of their losses, but rather to give them extra cash right after the storm so that they can start using it in their recovery activities. Along with that is the point on wanting to make sure that we educate on disaster risk management and how this type of insurance isn't a silver bullet that will solve all of your issues, but rather is one tool that should be used alongside other measures. That's how it can be most effectively used. And lastly, on this slide, what we want to talk about is the need to constantly improve parametric models. These are the models that are used to calculate what the different trigger levels should be, the amount of rainfall and wind speed needed to trigger a payout, as well as what the cost of the insurance should be. And the more we collect data and analyze these models, the more that we can improve them and create products that better meet the needs of the people. So go into the next slide. Next slide. Thanks. We also want to talk about, as we move forward in the project, how to create a segmented approach for different target groups. Because the different target groups are exposed to different types of risk and have different risk profiles, one product isn't always going to meet the needs of everyone on the island. So for example, some of the farmer groups have a big need for perhaps a drought product when they don't receive a lot of rain. This would highly affect them. Fishermen, on the other hand, are not so affected by drought, and so they would not need this type of product. But maybe one looking more at wave height and rainfall and wind speed that would prevent them from going out and fishing. And so as we move forward in the project, we want to look specifically at these different groups and see what are their specific risk profiles and what type of product would suit them best. Along with that, we also want to acknowledge that there are certain income groups in every country that just can't afford market-based insurance products. And for these groups, we want to make sure that we're talking with governments and talking about the need for social protection to better protect them, especially because these lower income groups are often the worst hit by such events and are the ones in the most need for extra help after such an event. Creating a type of insurance product that could be linked to a social protection so that people who use social protection can receive an extra payout or benefit after such a big event in order to get them to recover more quickly could be a way then to better cover everyone on the island. Along with that is the need to work closely with distribution channels and in a way that benefits the distribution channels too. So this would be a way of equipping them so that not only can they talk to potential policy holders in a way that they would understand the products, but also making sure that policyholders themselves have an easy and accessible way to make their insurance premium payments, so that they wouldn't have to drive, for example, into the city to their nearest local insurance office, which isn't always something that's feasible for people to do on a monthly basis. And lastly, we want to work on the development group policies. This is one way to increase the accessibility of such products. If we're able to facilitate the collection of premiums and payouts through groups and organizations that people are already a part of, this could help people then more easily make their payments, more easily learn about them, as well as create products that meet the needs of the specific group. For example, if it's one like a banana farming cooperative, where they would have a similar risk profile. And the last slide. And so going forward, what we would also like to work on is the development of creating partnerships with different local NGOs and governments so that we can start better educating and raising awareness on such products. The thing that you find is, because it is a tricky topic to learn about, you can't often just hold one workshop and hope that everyone then understands what's needed and how it works forever, but rather it's something that should be talked about and explained, and be very transparent in a way that people understand that this isn't the solution to all risk, but rather this is a tool that can be used, and it's up for the individual or the group to decide if it's a tool that would make sense for them. Along with that, we want to work on creating competition and working with different insurers who work with different target groups, because they do know the needs and risk of their own target groups. This could allow for different products to be made that would better meet the needs of these groups. Along with that comes the need for the development of digital solutions. If we're able to facilitate the collection of premiums and payouts through the digital means, this could lead to a lower cost in the product, as the alternative of having to send out a certified insurer into the market can be quite pricey. So this is one way to reduce the overall costs. And then lastly, for us, it's important to have the partner buy-in in a business case for parametric microinsurance. If this becomes an activity that's not of any benefit to the local insurer, it could become an activity that they then cut if business gets tough. So it needs to make business sense for the local insurer in the country in order for them to invest and innovate in these types of products. And so I myself and my colleague Simca Kraft, I know, would be happy to answer any questions you have.
Question, I'm Derek Charles. Question, I noted that the insurance is index-based and it's based on the wind speed and the rainfall. In a situation where you have two farmers close by with identical crops, identical size of plots, how do you determine the premium if one farmer is doing very good practices and the other doesn't? How do you determine the premium that the farmer is going to pay? Is it on the size of the land and the crop, or is it based on the condition of the field? Thank you.
It's a really good question that you're asking. And basically how it works is that the premium is the same for everyone. The way it worked in St. Lucia, for example, people could buy up to 10 units of premium. One unit would cost $100 EC, and depending on the amount of coverage that you need, you could buy up to 10 units that would cost you 1,000 EC. How it works though is, if, for example, you are protecting your farm quite well, and I am not, because I'm thinking I have insurance, so what do I need to worry about? And a storm passes through and I get a lot of damage and you do not. Because we took out the same policy, we would still get the same payout. And this is the message that we want to make sure we tell people when they're purchasing such a product, is that the more that you protect yourself, the more then this money is used for you and your specific needs. If I don't take any preparedness measures and I receive a huge amount of damage, all of that money will probably have to go then to repair my damages. But yeah, the actual payout amount is only going to be determined by the strength of the storm, the amount of rainfall or wind speed, and not by how well you protected yourself.
Thank you.
Good morning, Jennifer. Yes, I noticed you did not mention Grenada at all, but I do know, I got it from the site actually, that the project was launched in Grenada. Do you have any lessons specifically from Grenada? Why it didn't get off the ground?
I do have some. So I do know that an insurance product was actually regulated in Grenada. And it was before me and my current colleagues working on the project started working on it. So it was something that we learned about, but only found out later why the product wasn't picked up quite enough. And one of the lessons learned we kind of found was this need for making a business case for insurance, where I believe the local insurer had a certain expectation as far as what could be done on the NGO side, as well as the NGO MCII had certain expectations about what could be invested from the insurer side. And that's why when we go forward with developing the products, we need to be clear about what are the associated costs of introducing such a product into the market, and how, even though we can assist with this in the introduction phase of this, how can we make sure that the insurer has what they need to also work on the topic, especially when it comes to marketing and advertising these types of products. So I don't know all the details of why it kind of didn't end up becoming a success in the market, but I believe it was because of this idea of what the expectations were as far as what's needed when introducing the product and entering the market.
May I ask a question?
Maybe also quickly following up on this. So it is also not very easy to say. It's kind of a complex process. And thank you, Jennifer, for putting everything out. So it is really a partnership that have to bring everyone together, and you know that partnerships are not easy. So the government needs to regulate the product, and since this is a new product, maybe the codes or laws are not appropriate, etc. So that's a lot of work. It needs to be part in as a more comprehensive risk management strategy, because it cannot be your only tool. For that, it's yeah, the risk is just too high to the sector or to the island generally. And also we said like associations, aggregator need to be part of it, and then also an insurer. And specifically for Grenada, it has been a business decision at that point to not engage, and now we are in discussions with insurers to and I think we have a strategy to also bring it back online, but it's also clear that it wasn't a priority back then. So as I said, this partnership to bring it together really needs many actors, and it's also totally fine. Jennifer put out the challenges, what needs to happen so that different actors can engage. And for Grenada, that was a little bit of a challenge to on the primary insurer side of things. So, but that's okay. I think we also have to learn, and moving forward, what we do see is that one approach to go past this is also to further engage with, for example, the GRIF that has this regional presence, and also an institutional setup, which is that of a mutual insurer. So to think about what role they can play to overcome this kind of national gap moving forward, so that these products are actually in the market. But I think it's not something which was going to happen this hurricane season or even next hurricane season in Grenada. But it's something which is definitely the vision to have these products available.
Yeah.
Hello,
Just
can
a
I say
question.
something? George Philip. I think also when the product was introduced into Grenada, one of the main target group was the farming community. And in agriculture, the crop that is most affected by such, wind, rain, hurricanes is bananas. And at that time, the banana industry was actually on the rapid decline. So you had farmers were not interested in taking out insurance on a crop that was declining, because at that time we were not exporting any bananas again. And so this was one of the reasons, I believe, actually prevented farmers, people from buying into the product.
Yeah, this is Aiden here.
Yeah.
Just one question as it relates to the insurance. Are there any specific criteria for someone to become involved in the insurance, to be a part of it?
So you be at least 18 years old to purchase it, but otherwise there's no specific regulation. We do prevent from gambling by only allowing each individual to take out 10 units, but other than that, no specific regulations. So it's available to anyone who thinks that they would be affected by these types of risk.
I was thinking if some farmers, for example, might think that there is certain elements of inequalities associated with it, seeing that they would be paying the same premium, they might be in the same parish, but they might be exposed to different risks, and still receive the same premium. I mean, pay the same premium and the benefits, when payout are the same.
They would also receive the same payout. So I think from that perspective, it is inherently fair. It is also, I think generally we need to have the call to have these products available. It's not something which is extremely easy to do. We have to be clear. Also, for example, agriculture, specifically the agriculture sector, what we heard about, for example, banana is very exposed.
Where is him?
So the technical risk is very high. So the premium is very high. To have a setup which is really successful is not so easy. So and it's also a challenge around the globe. So just making this clear, but still I think the alternative to not have anything is also not acceptable in the context of increasing risks. I think also next level is there are ideas how to, for example, we heard about government needing to step in for the sector, and I think this is something which happens at a global level very often, that the countries actually help their farmers once something happens, but it's not something you can actually be sure about that it will happen. And it's also not fully covering, say, the damage or your loss of assets, or it's not fully covering actually the money you need to get back to your feet, or on your feet. So I think some kind of hybrid approaches between, say, government helping the farmers and some products helping the farmers at the same time is something which can be looked into and could also be appropriate for the Caribbean region.
Thank you.
Hello, yes. It's Fletcher here. Question. Sorry if I miss this point. Is there any possibility for group insurance in that regard, where farmers, as was indicated in the previous question, farmers who are operating in boundaries with each other in the same locality and so on, can in fact come together and buy into that insurance as a group rather than as individuals?
Jennifer, do you want to have a first pick?
Yeah, so it's definitely a possibility to structure it in a group policy way. And by doing that, then often you can lower the administrative costs. So this would even be a practice that would be encouraged.
Okay, thank you.
Questions from Elaine here. Two questions. One, this kind of say crop insurance or so, does the size of property influence the amount of the premium and then the payout? And then the second question has to do with the mention earlier about the social protection and linking some kinds of products to social protection. I'm not sure if I understood it correctly. Could you explain again that piece again, please? Thanks.
Yeah, all right, before you all answer, I think Ingrid had a question, so if we could take all three.
Oh, sure, yeah. Sure. It's more of observation. When you spoke, you talk about the insurance is not to cover losses, but to help you to start. And I'm thinking of, you said that the premium would be very high. I am asking the ratio of the payment for the policy compared to the payout. How sustainable is that for a farmer? And I would also want to add, probably it's better the farmer save his money to help himself when he has problem. Because if he's not going to get coverage to cover his losses, how much of his losses are you going to cover? Thank you.
I mean, I can have a first pick and then you, Jennifer, jump in. I think the last question is very important. And I think generally what, and I think also in this group, what should be the framework is that of what's the most cost-effective risk management option you have. But it's also important to know that these kind of risk retention, and I think Karen presented in the beginning, that can also come with very big consequences. So if you actually saving, yes, it could be an option. But if, for example, if you have to sell different assets after an event in order to become operational again, it can be very erosive. And there are like these concepts of poverty trap, for example, where shocks, external shocks, actually become erosive to productive assets, and then as a result, this becomes a big problem. So I'm just saying it should be cost effective over the long term. And then in terms of the insurance, I mean the technical price or the risk, the premium and the sum insured, I think, Jennifer, you can say something about it. It reflects actually your risk. So, I mean, if it, for example, if you have a risk of total loss every 20 years or so, it will reflect that. With insurance, it's always that your premium payment over the long run is more than what you would expect in terms of payout. This is the principle of insurance. But it can help you to buffer bigger losses that you cannot, where you cannot build up, for example, your own reserves at the same time. So Jennifer, you can give me the exact premium rates, but it's definitely because the risk is high, it's quite high. And then the other one is, but again, on this question around what is insured and how it differs, it's very transparent. It says with this type of event, you can expect that payout, and you just say, okay, how much payout do I need? And then the product will say, okay, and for that payout, I would need to pay a premium of X every year. And the smallest units actually for the product running in St. Lucia and Jamaica are very small, so that they are affordable. But obviously also that means that the payout is not like you're not rich afterwards. It just gives you a little bit of liquidity to start again. Jennifer, do you have anything to add?
Yeah, and so with the question regarding like the size of property, does it affect the cost of the premium? So it's up to the individual to choose how many units they want to buy. One unit costs 100 AC dollars. So maybe if you only have a small farm, you just take out 2 units. And maybe if you have a very big farm, you take out 8 units, which would be then 800 AC dollars. And then the amount of payout then depends on the strength of the storm. So like a category 4 or 5 would be a 100% payout. So for 1 unit of 100 AC dollars, that would be 1,000 AC dollar payout. But for smaller storms, you get 75% payout, or like category 1 or 2 would be 40% or 20% payout. Depends on the rainfall level and wind speed. And with the question regarding social protection, so this is an idea that MCII and many other organizations have begun talking about. It's the role that insurance can play then in kind of buffering the social protection system, because we know certain groups in society need the support from the government after such a natural hazard strikes. Often these groups need even more help because their houses are worse affected than other groups. And one way that the government could provide this extra support would be if, for example, they had an insurance then, so that whenever hurricane passed through the island, they would get a payout, and this payout could then go to these groups that need the extra support. This is an idea that we're kind of socializing now. Yeah, but I don't know if it's been used in practice yet.
Okay, I see we have another question from Steve.
Yes, thank you. Good morning. I'm really impressed with the initiative. I'm fortunate in that I've been working with the Caribbean crop modelers, a group out of Mona. I have been involved with some parametric and index-based insurance programs, both in St. Lucia and other places. And what I found interesting is that you did not mention blockchain and blockchain technology at all, which I see as the solution to bringing this initiative closer to the silver bullet that we keep talking about, the magic bullet that we keep talking about, because of the transparency. And I understand the concerns of some of the questioners thus far in terms of how do you really quantify what payout you deserve or you think you deserve. And that would have to do with how well you have been able to model a category 3 event on your farm. How well you've been able to model a category 4 event on your farm, and what kind of percentage losses you would incur. And towards Derek's first question, which was a very good question, it all has to do with the fact that if you're taking precautionary measures, then your loss is going to be hopefully considerably less than your payout amount, because the payout amount is indexed, it's based on the event, not on the damage. So I think we have a lot more work to do. I really think that you should at least let us know if blockchain technology is going to be underpinning some of what you're suggesting or what has been rolled out thus far. If we look at what Farm Credibly has been able to do in Jamaica, and so we can see how having a blockchain underpinning to the whole risk insurance mechanism would make a lot of sense. So I just wanted to know if you deliberately left it out or if it's not being considered at all. Thank you.
Yeah, so basically with the modeling of the products, what we do is work with modelers and reinsurers that create such products. And I know they are looking into using blockchain technology. I don't know. I know with the Craig project, we're also planning to use, start developing more advanced models, but yeah, this will also depend then on our discussions with our modelers and reinsurers.
Yeah, I mean, from my perspective, there has been a lot of talk around blockchain, and what we've seen in the past for our engagement, the bottleneck was not so much direct client management, but the bottlenecks were, for example, in terms of the general, more like the pricing and the distribution setup, and it wasn't related to the technology choice. It was more related to, say, also the willingness of the primary insurer to fully engage. So I think it's very important to highlight the technological advances that are possible through blockchain, and also what it means to, for example, have innovative products with new types of client engagement, where basically you can manage the contracts through a blockchain. But at the same time, again, this is not a silver bullet, we need to, that there are like several pieces that have to be advanced, and then I think blockchain can become one of the pieces. So we'll definitely also look into it, but it won't be the, yeah, it will only be one part of the puzzle moving forward.
Okay, I think that was a very robust question and answer time. Okay, Sandra, go ahead.
Yes. In all of this, I think we need to ask ourselves, what really is the ultimate objective? We're talking climate and climate resilience. Therefore, I do not see an insurance product without having also taken the necessary precautions on the ground. Because for the individual, or at least for most of the individuals, there might be other reasons for doing it. But I think for the average and for most individuals, what you really want to do is to stem the loss. And secondly, if you have a loss, you are not dependent. You don't know where to turn. You don't have to go wait on government asking for handouts, etc., etc., etc. And from a development perspective as well, if we're talking about the vulnerable and about the poor, we also want to give a hand up. I think Dr. Fletcher and Derek Charles asked some serious questions that need to be considered in terms of this link to climate insurance. It has to be, because what I think, what you want to encourage on the ground is people taking the necessary precautionary measures. And therefore, who is going to, for the lack of a better word at this point in time, say police that? Therefore, it might be useful to do this through farmers collectives, a farmers organization, where everybody commits. It's, you know, we have done this thing in bananas where there were certain standards that, you know, the banana farmers had to adhere to. It had to be adhered to at the country level, at the collective of the Windward Islands, etc., etc. So at the ground, we're actually trying to do something about stemming the loss. And therefore, if push comes to shove where, you know, the extreme event overtakes us, then we know we have something to fall back on. But in my opinion, the precautionary measures which are taken on the ground are first order, and therefore, how do we incentivize that in terms of the premium that's paid? And therefore, through the organization, it can also help those. The premium is not so heavy on the burdens of individuals And at the collective level, therefore, the organization will be also able to help those who are more disadvantaged as a result of an extreme event.
I mean, I think Kind is going to present very soon the integrated climate risk management and how it links together conceptually. And I think also Karen presented in the beginning what the different dimensions of resilience mean. And I think this already says that actually it has to go together. So now for something very concrete, like a concrete insurance product in the market, I mean, Jennifer, you can also say something about it because you worked on this link for a long time. So it's quite clear that this needs to happen because you have to include risk reducing activities at the first place, as the first layer of defense. And it also incentivizes it in the sense that the payout will be the same. If you have done risk reducing activities, you will receive the same payout, which means you will have more spendable resources afterwards because you will be better off in that situation. So the incentive structure is clear. On the other hand, insurance for a long time had a link to risk reduction. So actually the whole idea around insurance came out of, say, higher risk awareness around fire after the big London fire. And so the problem is that with this specific type of insurance, you cannot directly, you cannot make the insurer the police, what you call the police, because you actually want to avoid this pricey and also lengthy sometimes process of loss adjusting. And so this is a technical issue that you cannot directly put the conditions on the contract itself. But I think you are going into the very right direction through, for example, group policy, thinking about how alternatively can we make sure that this general question around risk reducing anticipatory action as well as absorptive action can take place. But colleagues, please, if you have anything, otherwise we can also explain it with the risk management cycle that I think Kane is going to present soon.
Yeah.
Okay, if I can say something as well. I think it is important for us in this project. This is Richard from CPDC speaking. I think it's important for us in this project to focus somewhat on the pro-poor element of the entire exercise. We have mentioned roughly that we have to find a way maybe to get governments or some development organizations involved in supporting, ensuring that those most in need are indeed included. And I would want to commit us to working on developing some proposals across the 3 project countries on how that can happen and how that can be integrated from the stakeholder perspective. I think that's a very important element of this entire project and what we're doing.
Thank you very much for this robust question and answer time. Thank you for that to Josh and Richard. I think that is also a very much needed initiative, and we will look into seeing how we could carry that out. At this time, we just want to take a quick 5-minute break so that we could go to the bathroom, drink some water, stretch our legs, and come back and hear more about the integrated disaster risk management.
Your number. 1932. Mama, so when
Hi, is everyone back? Going to do a quick recap of what we learned. I'm just going to use the game of Jeopardy. You can join in if you want. So we just have 3 topics: the MAPS project itself, the impacts of climate events, climate disaster risk financing, and insurance. So let's start with the MAPS project for 100. The MAPS project is being funded by which European government?
Hello? Germany?
Correct is right. This international project is being implemented in how many countries? Caribbean, Laos, Madagascar, Sri Lanka.
7.
Yes. This German NGO strives for a world where vulnerable people can have access to and can afford protection against extreme weather. Right? Mm-hmm.
Is it, I think, MCI, was it Munich or something like that?
Yeah, MCII, yes. A global multi-country program that seeks to strengthen the resilience of developing countries to the impacts of climate shocks and disaster.
Is it CRAIC?
No, that's a good guess though. It's a partnership that has the G20 and the B20 countries in it. So
is it the GCF? Global Climate Fund?
It works alongside the Global Climate Fund.
Oh, is it the C, I think is the C, I think what's the CCI or something like that?
That's the project that MCI is doing, but it's under a bigger multi-country program. And this project is based on it, and it's the InsuResilience Global Partnership. These countries have been identified as water scarce with less than 1,000 cubic meters freshwater resources per capita. 2 of them are project countries and 1 isn't. That's my hint.
Antigua?
Uh-huh.
I can't remember this.
Okay, so that's good, Derek. George?
Barbuda?
Antigua, Barbuda, and Barbados. Uh-huh. So 1 more missing.
St. Kitts?
Correct. We have some smart people on this call. Okay. This is the word that gives me trouble. The ocean is experiencing a change which is causing damage to the coral reef.
Climate change?
It's climate change evil's twin.
Global warming?
It's ocean
acidification?
Thank you. You can see why I am proud. So we said that they have a lot more that because of the extreme events, there have been deaths related to it. However, when we look at it, there are more deaths in, what's another way? So fertilities are high. Oh, I just said it. Fertilities are higher in developing countries. So y'all should be able to get this one. This extreme weather destroyed 90% of the homes in Grenada.
Hurricane Ivan.
Good job, Derek. These 3 determinants of resilience are known as the 3 A's, or I call them the AAA batteries.
Was it adopt, adaptation, and something?
I think you need to ask a friend, but it is 3 A's.
Anticipate.
Anticipate.
Amplify, absorb, and adapt.
So we have anticipate, we have absorb and adapt. Yes. Good work. The incorporation of climate and disaster risk financing with other risk management approach is called It's an integrated approach. So I'm going to rephrase it and said that we're going to talk about it just now.
Integrated approach for climate risk reduction.
So we have integrated climate. Okay, no. So we have one word right, the integrated. So we're looking at so the approach is integrated, yes. And we approach them what we dealing with, what kind when these events are called natural.
Extreme.
Disasters.
Natural hazards.
Disasters. Yeah, so it's integrated disaster.
Management.
Close enough. Yeah. So we're going to hear about that right after we finish this little recap. This type of financing occurs before an event.
Was it the anti-financing? I can't remember the
Yeah,
title.
correct. And risk retention and misfinance relates to this type of financing. So if one was the ante, the other one is the
ex-ante.
The post. All right, good job. So now I'm going to hand over to Grenada. I believe she's on.
Hi.
Hi.
Hi, everyone. Yes, I think you've heard a lot about what I'm going to be presenting about, which is the integrated climate risk management approach. I will give a bit more in-depth look into the approach with a little bit of an insight on a case study from Morocco. This approach was developed during a project that was funded by the German government in partnership with GIZ, the German Development Agency. And we actually implemented in Barbados as well, but with the solar PV sector. And it was really based on really trying to understand how it can be implemented in different sectors. And in Morocco, we particularly looked at small to medium enterprises. So in this presentation, I will give you just a short video. It's about 6 minutes. I think that video really sums up a lot, way much better than I could, to explain what we're really talking about when it comes to integrated climate risk management approach. And then I will just go a bit more into the case study in Ait Malou, Morocco, where we actually conducted this research in partnership with local partners, and give a little bit of examples into the gaps we found and the co-benefits of considering insurance as an adaptation measure or as a risk reduction measure. Due to the time, I will only have time to look at just the first 3 phases. So that's the prevention phase, residual risk, and this is sometimes also referred to as the risk retention and transfer phase, and also a bit more insight on what we found with regards to the preparedness phase. And at the end, just a bit of a summary of in trying to provide insurance for the micro, small, and medium enterprises in Morocco, what were the general gaps we found and some of the recommendation that we gave in our report. So the next slide is actually a video. However, in the last workshop, the video we were not able to play it. So I
got it to work, I believe.
You did? Okay.
Yeah. Okay. Share.
Meet Mia. Mia works as a small hotel owner, renting rooms to people who visit her town, known for its beautiful nature and fresh produce. However, life there is not always easy, as her home is prone to hurricanes and flooding. These natural hazards can greatly damage people's houses, businesses, and resources, and can even push them into a poverty trap. But it doesn't have to be like this. As the frequency and intensity of natural hazards continue to increase, more and more experiences have been made on how to increase resilience to these events with the help of insurance and other risk transfer instruments. To better protect Mia against possible natural hazards, there are 5 steps. 1. Risk prevention. 2. Addressing of residual risk. 3. Preparing. 4. Responding. And 5. Recovering. These steps are all part of a disaster risk management approach that integrates risk transfer solutions. 1. Prevention. The first thing that should be done to help prevent serious damage is a risk analysis, which identifies the hazards in a specific area and analyzes how exposed the people, businesses, agricultural fields, and infrastructure are. This analysis will reveal what can be done to prevent damage and feed into the risk transfer instruments and early warning systems in the next phases. In this area of prevention, Mia can strengthen her hotel and home with stronger materials to make them more resistant to wind. Her community can work together to plant trees, build a wall to protect farmland and infrastructure from heavy rain, or clean drainage systems to prevent flooding. The government can implement and enforce land use restrictions to ensure that people don't build in flood-prone areas. 2. Addressing residual risk. However, even if you put all preventive measures in place, some residual risk still remains. This is where ex-ante financing, that is, financing before a hazard strikes, can help. As an individual, Mia can take out a microinsurance policy in case her hotel is damaged. Weather index insurance could be a good option for the farmers in Mia's community, which will pay out when there has been too much or too little rain throughout the year. If Mia and her community do not manage these risks ex ante but ex post, that is, after a hazard strikes, then they will be forced to rely on friends and families, savings, or additional borrowings. The government can also protect their citizens with pre-disaster financing using contingent debt facilities, which ensure that funding will be available immediately after a hazard hits and by taking out their own insurance. This money can then be used to provide emergency relief to the people or support reconstruction. If governments plan how to manage the financial consequences of a natural hazard, they will not need to manage ad hoc and rely on donor assistance, additional taxes, budget shifts, or taking out credit from external actors. Implementing different prevention measures will greatly help in reducing the cost of these types of insurance and financial instruments because they significantly reduce the overall risk exposure. 3. Preparing. After Mia and her community protect themselves with ex-ante financing, they need to prepare themselves for the natural hazards. They can do this by stockpiling food and water in case of an emergency and making sure that they have a safe place to go should a flood or hurricane come their way. The government can also train individuals in rescue and emergency services, establish early warning systems, and come up with a contingency plan to ensure that everyone knows what to do. Adaptation investments, that is, investments made to help countries adapt to climate change, microcredit, and increasing savings, could also be good options for the government to better prepare. 4. Responding. When a natural hazard hits, Mia, her community, and the government enter the response phase. It is essential to respond quickly to avoid further loss of human life or material damage. They can do this by helping with the search and rescue effort, providing temporary shelter and food, and quickly repairing the most needed infrastructure. The ex-ante financing will play a big role in making this quick response possible. It may also be necessary to acquire some ex-post financing by increasing taxes, reallocating national budgets, or taking out credit. Without this financing, it can be very difficult for people and the government to get back on their feet. 5. Recovering. Now that Mia has responded to the first impacts of the disaster, she can start the recovery process. The good news is that with the right assistance, her savings, and possible payouts from her insurance, she can start to build back better. This can be done by examining the affected areas and repairing things in a smarter way that prevents these damages from happening again. All these steps are linked to each other and are most effective when countries and their governments, communities, and individuals work together. When everyone knows what should be done to prepare for a natural hazard, the consequences will be much less severe. Thanks to this disaster risk management approach and integrated risk transfer solutions like insurance, Mia and her community will be more resilient and can make sure that these natural hazards never turn into disasters.
Thank you, Karen. Okay. So this case study will just be a little snapshot about Aikmalu, an industrial zone where we did our analysis. And like I said, it was with the micro, small, and medium enterprises. And they actually contribute about 40% to the GDP. And because of the informal nature of this sector in Morocco, they are quite exposed to climate impact and need a lot of finance to buffer the shocks, particularly in order to ensure business continuity. So that was one of the main reasons why we actually went into that zone. Some of the risks that they face is increased frequency of high rains, heavy rains leading to floods. There was also a lot of heat waves, also based on regional location exposure. And because of the industrial zone being intensively agro and fishery processing industry, there's also a lot of water stresses. And this has led to high price of water actually in the region. Due to the flooding that they have over the past couple of years, there's also been damage to building, disruption of agricultural products, as well as damage to road, which in turn affects business continuity. So it's quite intricate complexity once they have climatic risk impact or a disaster that hits them within that industrial zone. So next slide, please. This is, if you could just, thank you. So this is just a little bit to show you, maybe explain the cycle a little bit more in relation to the discussion that ensued after my colleague Jennifer presented. I remember someone asking about what is actually the goal of all of this. And as you can see in the center, it's resilience. So in this case, to really anticipate what the risks are, in order to absorb and to adapt the system. However, in looking at a particular, whether farmer or small to medium enterprises, it's also important to look at the overall system in which they operate. And this is the main idea here, where you start to actually identify what is actually present on ground, what frameworks, what institutional frameworks, what policies are involved. When it comes to that, there is also a lot of intersectionality in terms of disaster risk managers, the first responders, when it comes to thinking about insurance to help absorb some of the impacts. You also have sectors like the banking sector or the financial sector. And because it's climate change related, which is increased risk, and as time goes on, there is more increased impact. So the climate change community also comes in, while also trying to understand what the needs of the local population or the targeted population is. You also have the roles of local NGOs or civil society organizations that are closely working with those groups that maybe are of interest to the government to protect. We've also heard about, during the discussion, talking about really considering the most vulnerable low-income population. So the idea of this is when you're really trying to consider protecting the population, there are different phases and different stages. However, you can't separate it from each other. If you look at the outer line, the outer blue circle, you will see that prevention and the retention phase, or retention and risk transfer phase, which is also considered the risk, residual risk, there's not a clear line. They integrate it to each other. So for example, if you look into the inner blue circle, you see risk analysis more within the prevention phase. However, from the beginning of starting a risk analysis and the completion of starting analysis, of ending the risk analysis, you do have a slow integration into the next phase, which will be the risk retention. And it's important before you consider what risk you're going to transfer or retain to actually understand what risk you're actually facing. So this is where this whole process kind of merge into place, and really understanding the system in order to be able to design the actual product for the specific needs of the people, like Jennifer was presenting in her presentation earlier. Next slide, please. Okay, so with the prevention phase within this case study, where one of the base data we looked at was there was a legal, financial, and institutional framework that mostly favored post-disaster action. And therefore there was however, in Morocco particularly, there wasn't so much clear responsibility of which actor should take what measure and when does it end and who takes it over. So there was no clear responsibility among the actors of all these institutes. And that created a gap, which meant that when it comes to communal councils, there was not enough risk prevention measures in place. So one of the co-benefits of considering insurance as a risk reduction measure or as an adaptation measure is the key thing that in the insurance industry are pretty good at is trying to understand the risk, because that's how they price their insurance. So they need to know what the risks are. And this is where, by considering this aspect, and they are going to need this information, it actually helped to catalyze a risk assessment that will help to really understand the needs of the target group. So in this way, it can help also at the same time, risk assessment also helps to increase the awareness of floods. So that was one of the recommendations. The second one also talks about the fact that there was not enough maintenance of waterways or hydraulic installations. So you find vegetation in the area. If you remember the map, it was at the Atlantic Ocean, right at the border. So there was a lot of the drainage, for example, were not being maintained, or there's an overflow when there was heavy rains. And what we found was that there were been a lot of studies that have been conducted within the region and a lot of recommendations that have been made, but there were not enough preventative measures that were implemented. So in this aspect, in considering insurance, although cost-benefit analysis could be done external of consideration of insurance as a measure, but when considering insurance and including it in the cost-benefit analysis, you could really quantify the financial impacts of floods, as an example, and how much would it cost if you implement certain measures, and when you also, at what stage could you consider insurance, and what does that have, and what impact does that have on your premium, as an example. So there is a lot of benefit in actually considering using insurance. At the same time, having in mind that insurance is only mostly useful for a particular type or level of risk, which is it's better to really protect the most vulnerable, the people, as well as the economic assets or infrastructures in place. So the third one would be about the legal text of the natural disaster. It does exist, but they were not really specific to certain sectors. So there is been like a lack of awareness when it comes to the SMEs. The SMEs themselves don't even know where they would access such a product. So they didn't even know where they would access, for example, some of the loans. Some of the SMEs, obviously more towards the micro and small SMEs. So considering implementation of preventative measures could actually also help to not only lower the premium of insurance, but also help increase awareness of what the role of insurance is and how can they benefit from it. Also to help them with their business continuity. Next slide, please. Thank you. So this is the residual risk, which is also the risk retention and risk transfer part. We did find that the insurance sector mostly, they do have climate insurance to protect to protect cereal crops. However, the gap is that the enterprises face floods and there were no flood insurance or to cover for damages. So in considering insurance in here, we could also talk about the fact that there's been an increasing level and frequency of floods. And you also find that the insurance sector mostly consider historical data of disaster impact and don't really factor the incremental value of climate as a driver of risks. So in this area, we could also develop insurance solution that also cover the climatic risk solution. I'm looking at the time, so I'm just going to quickly skip the next one and go to the next slide. Thank you. So with the preparedness part, and this is where it's quite important to ensure that as much stakeholders, both you have the disaster managers that are really involved and the NGO or civil society organizations to be involved and really have all actors involved here in order to prepare to ensure that there's early action, early warning for early action in order to save lives. So the base data for this, from this case study showed that there's been a lack of national floodcasting and warning system. And the gap was related to the fact that the quality of data and the precision of meteorological information was lacking. So that also had an impact on developing an adequate forecasting system. And one of the recommendations with that is also to consider research institutes, universities, NGOs, in order to have models. One of the things that's very important here to consider is that insurance companies tend to do this risk assessment analysis, but this is part of their businesses. So there is a lot of motivation to have that information private. However, when you include local stakeholders such as universities and research institutes, this information can be public and can be used by other actors that are interested in them. So by gathering all of that, it becomes also knowledge within the country. And that obviously relates to once you have enough data to actually understand what the risks are and you have quality data, then this translates into transmitting early warning action that also triggers the disaster, the first responders to go in action and reduce loss of lives and livelihood. A second point here is with regards to the same system in the sense that alerts, warning alerts is available in the country. However, it's sent through the internet. But we are looking at micro, small, and medium enterprises working in an industrial zone, which means they're mostly inside a factory, agricultural factory. And while they're working, they're not watching TV, nor are they checking their, or surfing the internet. So most of the time they miss the message. And this is one of the gaps that we found, that institutional communication from the early warning system that is in place to the targeted population, there is a mismatch in that. And therefore, one of the proposal was to have a mobile app, since the majority of the people have some form of smartphone. It could be the basic one, but there's some form of smartphone. And this not only saves life, but when you're considering insurance and you build a system, early warning system tied with an insurance product, that could also help to trigger early finance that then could help the responders, depending on what insurance system has been put in place. But for example, with regards to, we've been talking about CRIF here, could also help to trigger where you already know the money's coming and then already start making plans, as opposed to not knowing if the money is coming at all or when it will arrive. So that's one of the benefit of also having an early warning action or forecast action system tied to an insurance, like a parametric insurance. Next slide, please. Thank you. So the summary of a couple of summaries points, just to give you an example of what we found. One of the barriers in engaging the SMEs was the fact that there was low frequency of disasters for them in regards to what they considered high impact. And I think someone had mentioned earlier about the banana farmers not being interested in buying the insurance product because banana was more or less going out of fashion at the time. So similarly, you have a perception of risk issue, which also has an impact on that. But one of the things is that they have had a lot of, well, in 2009, 2010, 2012, and 2014, they did have extensive infrastructure damage and business interruption. So there is motivation for that. At the same time, they didn't really feel the need to consider insurance as one of their risk reduction measures, but this is also partly due to the fact that there was no awareness on how to access such a product. So one of the recommendations we made was to really get, if the government is willing to provide a coverage for SMEs, just purely based on the amount of contribution they make on the GDP, and you have to bring in together different organizations, local NGOs, government, potential SMEs. And in this particular kind of way of thinking, this is where you could have early discussion, something like we are already having here, where you would even think beyond what's existing, what are the new ways we could address the risk now. So considering blockchain, it's been out there, we're talking about it. We're currently realizing more and more realizing the importance of technology in our lives with the current COVID situation. So new actors also probably could come in to solve the issue. In the end, the main thing is to make sure that a product is developed that is sustainable, that protects those that needs the protection, and everyone knows what they need to do, when they need to do it, and how they should be able to do it. I think my time is up there, and I would just say that if you want to have a more in-depth understanding of how to really apply this, whether in a project or within even your organization, there is a link which I've put there, and you could access the integrated climate risk management approach, where it used the agricultural sector particularly, and it looks at the different levels. So micro level, within the sector, the macro, meso, and the macro level, but particularly focusing on different actors within the agricultural sector, as well as fisheries. So yeah, if anyone has a question, I am willing to ask, and if I can't, to answer. If I can't, I will pass it on to one of my colleagues. Thank you.
Thank you. So we're going to just take like 3 questions at this time.
One question from me in relation to MSMEs. You mentioned them and then spoke about agriculture SMEs. Is there a reason for, at this time, leaving out the other MSMEs?
No, the industrial zone mostly focus on crop, citrus fruits, and that's why we went more into the agricultural part, but purely based on the case study region. The industrial zone is an agro-processing industrial zone.
Okay, thank you again for that question and for that presentation. I think we can move on to the next section now. Right, so now we're going to show the results of the state of play that we did in the 3 project countries to see what is actually going on the ground. So in Antigua, we found that they had 4 laws that are in place to help with climate disaster risk management. While in Barbados, there was 1, and in Grenada, there are 5 that are currently in existence that either laws or facilities that help with managing disaster risks. In all 3 countries, they belong to the Caribbean Disaster Emergency Management Agency, the Caribbean CARICOM Regional Framework for Achieving Development Resilience to Climate Change, and the Caribbean Regional Resilience Building Facility. So in the implementation of this, Antigua has a Sustainable Island Resource Framework Fund that provides low interest loans, and there are also civil society groups that are helping their beneficiaries set up greenhouses and restoring water reservoirs. While in Barbados, they are part of the Caribbean Regional Resilience Building Facility, which helps plan for long-term resilience, climate-smart growth strategies, and designing and implementing innovative policies and investment initiatives with their partners, the EU, World Bank, the Global Facility for Disaster Reduction and Recovery. And in Grenada, there is the COAST, which is a fisheries parametric insurance policy that is being piloted in Grenada and St. Lucia, and it seeks to provide coverage on other players in the fisheries industry to enable them to recover quickly from weather-related events, and is currently being funded by the US State Department and provided through CRIF. So what are the main insurance products and providers? We have the traditional insurance policies in all 3, and as well they're part of CRIF, and Grenada being the one that has COAST in addition. So since the development of CRIF, there have been 41 payouts to 13 member governments, equaling $152 million. Barbados and Antigua has benefited, but so far Grenada has not asked for a payout. As we said, that these policies and principles and frameworks are supposed to be grounded in pro-poor principles and gender mainstreaming. But Antigua, they did not find that they were very pro-poor principles. They found out that they were neutral on it when they examined the policies that were there, but they did believe that they were gender mainstreaming. For Barbados, they said it wasn't tied to pro-poor principles, and it wasn't too clear if they had gender mainstreaming. While for Grenada, it was a rating of not having any of these principles being integrated into the climate disaster risk management. So who are the main stakeholders that they work with? They work with the government ministries and agencies and insurance agencies. So what about civil society? Civil society said that their influence is between inexistent and existing but limited. They said that that is a fairly new concept in the Caribbean, and especially to those who have not been working in the area of disaster risk management. There's a need for more education and more inclusion of CSOs in disaster risk management, and for the free flow of information from government and private sectors to CSOs, and in turn, CSOs to government to private sector. For engagement and exchange structures to work, the relevant CSOs have to be included more in the week for organizations as partners, as they will give feedback to their membership bodies and ensure that CSOs are become more included in projects, initiatives, dialogues, and such. So then we come to our last activity. How can we work on the topic of CDRFI? So I'm going to put you back in breakout rooms, and I want you all to discuss among yourselves, what are the issues that we see in regards to climate risk and the Caribbean? How can these issues be addressed, and what would be our role in addressing these issues?
Can you again put in the questions into the chat as well?
Yes, let me do that now. I think we should all be back now. And we could start hearing from the breakout rooms. We could start with Sandra, Max, that room. Hello?
Sorry, okay. We didn't get down to the third question, but data was an issue. The issue of the absence of crop modeling, and in the absence of this, therefore, it was difficult to convince a small farmer that the unit premium really was representative of the risk. The insurance can play a useful role, but it should be of an approach. It should be part of an approach which addresses the issue of risk reduction. Also addresses the issue of strengthens the social protection. There is a need to ensure stakeholder participation. Is there any data or has there been any participation of those really affected? Is that what they really need? And the issue of synergies with other agencies and organizations dealing with the issue of risk reduction. And again, the issue of how this product, how the products will be designed to benefit those who really take risk reduction steps, and the blockchain technology. The issue of the blockchain technology being applied so that in fact the premiums in fact also could be more attractive for people to participate.
Okay. That's definitely some good insights you provided. All right, let's move on to the other breakout room, which had Lydia, Sanke, Ingrid, and Benedict.
Yeah, I think I can quickly report back. So we focus on the topic of, or it was addressed to say that there are instruments, especially for the sovereign level, like GRIF. But the question is how this can benefit the region level, also if there's like one specific region that is affected and not the entire country. So one issue could be to better link sovereign level instruments to regional level instruments and meso level instruments. And so that could be a specific purpose also of this group, to promote that role, to look at that role and promote it. And then we also discussed the use of networks and networking to drive forward these questions, because that's a very important question for, a very important modality for Caribbean region. Again, if I missed something, please group add. Otherwise, over.
Okay, thank you. And then the last group would be Derek. I think he was nominated.
Oh my. Okay. We discussed it a bit. I think we needed some more time, but I have a few points here. One of the things we considered was whether or not the farmers understand the issues about insurance. Noting a farmer think that if they have to get a payout, it must be more than what they lost. I don't think they really understand that as yet. You know, they don't understand somebody indemnify for the loss. You're not supposed to make a profit. You know? So I think we need to bring that home. The other factor is that in the farming communities, they do mixed cropping, and they have the perception that certain crops, because you have cocoa and nutmeg and short crops, the larger crop will protect the smaller ones, you know, because it's not a pure stand. For example, if you have cocoa and nutmeg in a field with I don't know, bananas and probably Dashin and Tanya, they're of the view that the stronger crops will brace the wind, will protect the wind from damaging the other crops. So they may not think it's wise to take out insurance in a field like that. However, in a situation where you have a pure stand crop, like a banana crop pure stand, they will think the need, they will, I mean, they will sort of feel the urge to have an insurance to protect that crop, because they know the sensitivity, the sensitive nature of a banana crop compared to a tree crop. And the other thing is that there are many small holdings, and it's kind of difficult. Farmers, they may have 3 different plots of land, and they may be in different zones, different areas. And some areas that may be affected with the rain and the wind, it might just be one small portion, but their situation will be, should I insure all of the area, or should I just insure one plot? You know, so that's another issue. And I think these are the main things we come about. And how to address the issues, we're looking at, we discussed, we need to have some more of cooperatives in terms of productive cooperatives where farmers come together and have farmers in certain areas with certain crops could come together and buy insurance as a group. But first of all, the group must be well organized in terms of their administrative procedures or their organizational procedures, and to ensure that farmers not just rely on other farmers, but all farmers should practice good agricultural practices. So in other words, we don't want no one farmer get a better payoff than the others because some farmers do good practices, so they may get, they'll get a payout, but because they do good practices, the payout going to seem to be better than those who have not done good practices because they lost more. So that's an area, again, we think we need to address. And our role in addressing this, well, we haven't reached that, but my thing is to advocate that there are risks and we need to mitigate about it. Thank you.
Thank you so much for that. And I really think we had a very vibrant discussion today. And I just want to know if there's any questions and answers, any questions that were not addressed so far? Okay.
Yeah, I just want to make a comment as it has come from Derek's presentation, right, about the issue of good practices. And there is just nature. I believe what we want is to ensure that everyone is, and therefore that's where the issue of the collectives coming, as he has pointed out, in terms of ensuring that everyone maintains a certain standard, right? And hopefully that can also contribute to lowering the premium. But we have to deal with nature. We have to deal with nature. So in fact, 2 farmers side by side may be practicing the same practices, but, you know, one gets knocked out and one doesn't. Okay? So according to what you're saying there, they both will get the same payout. I think this is an issue that we need to look at, because somebody, I mean, the issue of insurance and how insurance operates, to the best of my knowledge, and I don't know too much about it, and I have to say I'm not very progressive when it comes to insurance. I view them all with great suspicion. The issue is about ensuring that premiums are more than payouts. If you have a situation where a guy gets knocked out, and, well, of course, he will get according to the premium that is paid. But I think there is also going to be some level of frustration there, right? There is really some level of frustration because at the end of the day, you want to help people get back on track. And he might, well, I can't say he needs a little more, because you will get according to the payouts. You will get according to the payouts. And that is where the role, I think, of the organization, of the collective will come in. And how do you help your members? Because that guy there who has got totally knocked out is going to require a little more support than the person who doesn't get knocked out at that particular time. And that's ordinary how insurance will run, because they don't expect all of us to get knocked out at the same time. So they pay who get knocked out according to the level of damage. I just want to say too, that we did not talk about, we talked about the farmers side by side. But I remember my colleague George, and I think George is still there, about some windbreaks that were taken out in a certain area, right? And then suddenly farmers who are not side by side, but down wherever they are, they were now beginning to feel that impact, okay? So I think we really need to really have a very holistic approach to this. And what we're really talking about collectively for the state, for individuals, is about reducing impact. And one of the first things is for it to start on the ground in terms of risk reduction. One of the colleagues mentioned, you know, this is not really about insurance. And let's be very clear about this. This is not about the insurance company. It is about the farmer and the vulnerable people that we're trying to help. How does insurance fit in? We need to have our focus on the persons we're trying to help.
Yes, thank you so much for that, Sandra. And you're right. We have to have a holistic approach in order for this to work. And we are going to incorporate the voices of the people and the planning as well.
I have a question.
Oh, okay, all right. So let George go, and then Ingrid, and then Lydia. Okay.
Okay. It is my understanding that we're speaking about weather in terms of rain and wind. And I am just thinking about the other extreme. What's about drought?
Okay. Is Sanke still on?
Yeah, sure. I mean, generally, so the concrete product we discussed early on was around rain and wind speed, but obviously always it should reflect basically the needs, and there are also possibilities to design products for drought. I mean, in the end, it is the lack of water. Whether you say too much water or too little water, it is possible. It was just not done in the past in the context of our project, but I think generally this is possible. And it would follow basically your risk analysis. If you say this is what is really the difficult peril, and this is also what I can do in terms of reducing the risk, but I can only go that far. And for this, I would need to take out an insurance or an alternative risk financing strategy. You need to prioritize that based on your risk profile. So yeah, so I'm generally saying, on a general sense, drought insurance is a possibility. But there are also specifics to it, because the drought is not as easy to say, because there are different types of droughts: meteorological drought, agricultural drought, hydrological drought. So the phenomenon looks a bit different, but I think generally it is possible.
Okay, thank you. So let's take the question from Ingrid.
good practices. You have a group of farmers together. 6 of them, 5 is doing good practices, the drainage, pruning, what have you, and the other farmer is not doing that. In the middle of a disaster, he has a lot of damages while the other farmers do not sustain that amount of damage. How are you going to pay out one farmer concern? That's my question. Is the farmer who gets the damage because he's in a group and the others are protected, are you going to consider that farmer who sustained that amount of damage?
Thank you for that question.
Can I go now?
Yeah, we'll take you 2 and then we'll let Sanke respond.
Okay. So,
I would also like to ask a question after too.
Okay, all right.
Okay, so from a financing perspective, I find that maybe we all look at financing in silos. I was wondering, is there some way we can find a happy marriage between this disaster risk financing, grant funding or financing, which we know sometimes the farmers have access to through all these various agencies, and strict financing, be it through the financial institutions, that will ensure the sustainability, resilience. In other words, how does this farmer or whoever is the target audience here be assured that he will always be funded in some sustainable way? And how can those three components come together in the best of a financing package, rates, terms, everything, be whatever it may, to ensure that he always has that line? So for instance, should he encounter a disaster, we know that CPDC and whatever we're doing here is able to be a buffer. So that there's this assurance from the financial perspective that, okay, there is something he can call on and he wouldn't be completely lost or the only one who loses entirely because he doesn't have financing to continue his operations. So in other words, whether this financing comes back through his financial institution or direct to himself, but in some way that he know he can rebuild. Because I don't think that any one of these in isolation could 100% cater for the farmer. That's just my 2 cents.
Okay, thank you so much for that. And we take the last question.
Okay, yes. This is Aiden here, Aiden Futo. A number of comparisons was made regarding, farmers farming side by side, and some using best practices while others not. And those that are not using it are suffering most. Yes, best practices do contribute to reduction in risk. However, both farmers could be implementing best practices and still one could suffer significantly greater damages than the other. So, it is not the only consideration. You have to take into consideration factors like exposure, maybe they might be close, but one might be more exposed, one might be, the topography might be different. So a number of factors. So the premium and all these sort of things, I think, should be more carefully examined and pay out and all these things, because one might be at a disadvantage compared to the other. That's my contribution.
Thank you.
Hello, can I say something? Hello?
Okay, but let's Sanke respond and then we get the next 2 so that he doesn't forget the questions.
Okay, yeah, thank you. And I think that an important topic was raised, and that is also looking at bundled products. So it's not necessarily an either or, you can also do things together. For example, there are products out there that look at, say, an agriculture loan connected to an insurance product, which in the end is the more cost-effective way to handle the climate risk that otherwise the bank would have to charge on top of the normal rate, credit rate. So there are definitely ways to do it. There are also ways that say through this kind of banking product, the premium can be pre-financed, so that it only has to be paid once the harvest is there, and the loan can be paid back, because the cash flow for a farmer usually is not. It depends obviously, but it's a very broad generalization, but often it is not equally distributed throughout the year, and it might be when the premium has to be paid that there's no funding available. So these are all options to bring it together, but again, it has to be evaluated on the specific context. I just wanted to mention that these products exist. And then maybe on this point around how to handle the generation and equity aspect in terms of contributing to an insurance scheme, and then through a group approach, for example, have different members benefit to a different extent. So I think, one is one should actually make sure that the approach, to the extent possible, is risk-based, so that either the people are paying for their risks proportionally, or are getting, or the benefits of the payouts stay proportional to their risk. So I think this is something which is important, but at the same time, it is also important that there are probably equity considerations. So for an association, it will need to be the association that manages this and thinks about it. What does it mean if some farmers are more affected, act of God, than others? And how can they be helped? And how can one make sure that everyone is doing his or her best to also reduce the risk in the first place? So it will be the specific arrangement of that group. I don't know how strong the groups are and what kind of modalities they have, but I know that in a kind of it's a kind of risk pool. That's what it is. So it's a social group that is sharing the risk. There needs to be these conversations. So this is all I can say on a very abstract level. But it will be the group then managing this and finding ways to pay out to the farmers, etc.
Thank you. I know please beg my apologies. I know we said we would be able to take more contributions, but I didn't realize that we have gone way over time. So I'm going to wrap up. I'm going to let you all know that we have a hub on our website that has more information about the project. It's not completed, so have patience with us as well. And as well, Sandra is going to send out a short exit survey that you're going to get to put what comments about what other topics that you want to have us discuss in the upcoming roundtable discussions. And hopefully those will get to be in person once COVID goes away. So thank you so much for being here today. And I'm truly honored and I'm truly inspired by this vibrant conversation that we had.
And I would just like to add my thanks to everybody. We have had quite a good turnout. I hope that you found the conversation useful, that you got some more information, because I do know that at the government level, the IMF is assisting the government of Grenada with its climate risk financing strategy. So I think we may be in a little better position to look at what the government is proposing. Thank you, Karen.
Thank you, Sandra, for organizing this amazing meeting as well. Thank you, Sanke, for being so open to answering all our questions. Have a great day, everyone.
Bye, everyone.
Stay safe and well.
Goodbye, everyone.
Thank you. Bye, everyone.
Okay, bye. Bye, and thanks for having me.
Bye-bye, everyone.